What's going on here? I know we're live. Morning, everybody. It's the 15th of July. We're Signal Centre talking ball. I'm Joe Neighbour, joined by the usual crew, Ian and Steve. How are we doing, gents?
Morning all. Yeah, all
very
good in the hood.
Thank you.
Ian's looking fresh this morning. First haircut in how long?
4 months.
Wow, looking.
That's all right, that is, mate. Who did that?
Yeah.
Do you want me to get him for you?
Your turn next, Stevie.
I've had mine at the weekend.
There you go. We're all freshly trimmed.
I had to do mine myself.
Outrageous.
It was quite hard to do self-distancing. My hand had to be 2 meters away from my head while I was doing it.
Do you have a little tool?
stick.
Yeah, stick extension. Yeah, I wore a mask though, so that's all right.
Oh, that's good.
Good. What's going on then, guys?
Well, a little bit of a sort of like a rebound in stocks again.
Yeah.
So yeah,
It's another
It's pretty hectic, isn't it? Really, it's all over the place.
Modena or something. The drug company, isn't it? This time round.
Many of them.
Once more, a vaccine hope has come to the aid of the market rally as Moderna announces progress with its COVID-19 vaccine trials. I mean, they're so quick to give hope, aren't they? And then
Yeah, but it's the first trials, and then they're actually saying that quite a large majority, a lot of people had side effects, and some of them were extremely severe. So, I mean, how can they say that they're successful trials? I don't quite understand that.
So, there's a 3-stage trial process, isn't there, for the FDA
Yeah, normally.
to be approved as a drug? So, you know, stage 1, I'm sure millions would go through stage 1. It's when they're at stage 3 it becomes vaguely interesting.
Yeah.
Anyway, market's obviously pinning, its hopes on anything that it hears, any excuse to rally, it will take at the minute. So obviously got to be wary of that and go with the flow, I guess. I mean, looking at stocks yesterday, and have you noticed anything on the charts you want to bring up? I mean,
CAC.
I'll just have a quick look at
The mighty CAC.
DAX yesterday. So we came in the morning, had this sell-off, then we've had this rebound. It's made a tiny new high above the swing high from the 13th of June, but then it's now selling off again. So resistance there clearly around about 12,880. Looking to buy a dip actually today towards 12,465. But the way it's reacted off that resistance, that could be a gun to the head candidate for me today. Looking to sell it down to my buy entry level. So keep an eye on that. FTSE, I'll let Steve cover that. I'll just take a look at what will I take a look at? Gold. Still bullish at gold. Got quite close to my target entry yesterday at 1787 before the buyer stepped in just in front of this bullish trend. Got stopped out of my gun to head because I had a stop loss around about 1795, so that was a bit frustrating, but the way it goes. But all in all, gold looks still really bullish, and I think the challenge of those highs at 1818, maybe today, looking at it. So that's pretty much all that I've looked at today. Who wants to take the charts?
I'll have a go.
There you go, mate.
A couple of interesting patterns, but they need to play out. There you go. There's my caveat just before people start jumping all over it. People. And that's not played out. I was looking at that first thing this morning, which was a euro dollar. I thought potentially a head and shoulders. And the only reason I was looking at that is because I was looking at correlation and I was looking at euro yen. I just thought this was quite interesting here. Obviously, at the moment, it was still higher highs, higher lows, blah, 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 blah. But this looks like an expanding wedge pattern. And we've got trendline resistance just coming in around about 122.60, which is very close to this 61.8% fib. Now these, like all wedges, expanding wedge and the other wedge, what's the other wedge called?
Not expanding wedge.
Not expanding, normal wedge. Both have a bias to break to the downside. So I'll just, like I said, at the moment, buying dips is probably the call, but it depends what sort of reaction candle we get around here. Dollar index looks like it's on its arse still, though.
It is on its arse this morning. Look at that.
Still breaking lower, heading towards this previous support here. So yes, the that's about it. That's about all I've seen that was even remotely sexy. I mean, on the sort of pairs that I'm covering at the moment, this was one that I thought was quite interesting. Sterling New Zealand, if we get a break of there, then sort of a head and shoulders pattern. And also sort of going back to sort of the majors. And again, he's got a break. I was wondering whether or not that was a head and shoulders pattern this morning. But it held the right shoulder and then it's just dipped below. But I thought the long-term chart on this looked quite interesting as well. But there's still scope to get down to this 78.6% fib, I think, a sort of wedge pattern. So it really, at the moment, like Joe's doing, I know, is selling into rallies, which is the correct play until one of these formations plays out and then the bias reverses. But at the moment, like we're saying, the dollar looks like it's on the back foot, really.
Very much so. Yeah, it's pretty severe, that sell-off in dollar index.
Yeah, especially this morning, it's had a nice little jump down,
which is helping
in opening trade.
Priced against it, so oil is about to test that major resistance again. I'll actually bring this chart up quickly. This is the hourly chart, so we're approaching this 41 level, which is key because clearly it's capped the upside over the last few days or so. But if we flick to the longer term charts on the daily, we can see that it also correlates with this huge gap here that really sort of sparked the mass sell-off in oil, which comes in around about 41.16. So going to take a fair amount of effort and momentum to overcome that, I think. But if it does, then we could see a rally up to the upper end of that channel in the short term. And clearly, if the dollar continues to sell off, that's going to help its cause.
What's the sort of retracement we're at? What retracement level are we at
from those highs?
Yeah, from the highs to the lows.
Let's have a look.
Got OPEC today, don't you?
Just below a 61.8.
OPEC virtual meeting today.
And what's the low of the chart?
9.97.
Okay, yeah.
Have I drawn it on anywhere else? There's a bit of a cleaner daily chart there.
Yeah, I suppose it depends what chart you're mapping or looking at. I don't think have we got a chart which got like negative $60 on it.
I don't think so. It'd be an old futures chart, maybe.
Yeah.
What's the oil code for futures?
CL, is it CL?
Yeah, CL.
It sort of rolls off, doesn't it?
Yeah.
You need the continuous, don't you? But even that probably won't.
There you go.
Ah, there you go. Yeah, yeah. And it's probably not worth doing, is it?
I don't think you get many trend lines on there.
I can tell you where support is.
Support at minus 40.32.
Yeah, trying to buy dips in front of minus 40. Yeah, nice one.
Yeah. Okay, Steve, what you got?
Yeah, I'm just sort of like still looking at Euro Sterling. Really, that's the really interesting one.
Oh, he says, yeah, he had to say that, didn't he, after yesterday?
I was a bit disappointed. No, and my target was right up at 91.70. It got to 91.10. It's a bit of a shame.
Half an hour on it, I think.
Yeah, that's all right. Win's a win in my book.
Yeah.
So yeah, it's just I still, for some reason, it still feels like Euro's beating up sterling at the moment, but like with the dollar move, we're going to see positive moves in euro dollar and sterling dollar today. So but the levels that I'm really looking at, euro dollar, I'm looking to buy a dip, which is fine. But if we look at which chart did I have up? I think it was this one. It's really going back to this like 115 level in euro dollar. We can see it as it's quite a pivotal level, previous swing low. It broke it here and then continued to break it and then acted as resistance again back in March. So I think this sort of like range here between 115 and 116 will form the level of resistance that we've seen in the past, and it will take a lot for it to get through there. But who knows? The way this dollar's going, Phil is still a little bit bearish towards sterling dollar. We've got this double top formed on the 4-hour chart, broke through, it hit the measured move, so that's fine. It sort of did what it should do, and it's heading back up here. But I'm still sort of a little bit skeptical about the strength of this rally. It's around the 78.6 fib, and obviously you can sort of build quite decent sort of harmonic patterns from that sort of level eventually. And yeah, I just sort of think, are we lining up for another sort of like failed rally around about the 126.65 to 127 area? So that's why I'm looking at set shorts in front of there this morning. Obviously, with the dollar looking so strong with that momentum, makes me a little bit nervous about it. It's just a 2-to-1 risk reward, just a sort of like standard approach. But yeah, that's why I sort of like Euro Sterling. I still think we're going higher in it, despite the sort of pullback yesterday. Could see a little bit of a pullback. I'm trying to buy a dip in front of that neckline.
Cool.
Copper, nice reaction away from nice selling coming in around at the $3 level. Got down to 290, which for me is a bit of a line in the sand for the bulls at the moment. If we stay above 290, potential for extending higher, but a break below there and we could get a flush out. That'll all be related to stock markets as well. Stock markets are going bouncing, so I'm looking to buy a dip in copper. Silver looks pretty good. We're heading back towards that previous swing high around about 1965. Not far to go now. That'll be the test, and then you've got a $20 handle, which will be pretty psychological. And it seems to be sort of outperforming gold slightly at the moment. So this has been a decent move from the 16th of March low of $11.50. I'd estimate that's probably a 66.56% rally. That's pretty good.
Very good.
Lovely.
750 points, not bad in a few months.
Pretty good indeed. Right, gun to the head yesterday. So as you briefly touched upon, you two went head to head on Euro Sterling. Steve won out with his buy trade for a 0.55R win. Ian and myself were stopped out on Euro Sterling and gold. So overall, a little bit of a dip down in the overall P&L, as you can see there on the chart. So let's get on with it today. Who's got an idea for us?
Stevie.
Okay, I'll go. Easy, Tiger. Okay, you're forcing my hand. I'm a bit uncomfortable with it.
That is the idea.
Right, let's go Euro Yen.
Oh, he's going to go against me again.
Are you going long? Brilliant. Long at 122.39. Yeah, I'll give you a little bit more. 122.40. I'll give you a tick there.
I can't find anything else.
I'm going to go lower this candle 122.10. That's a 30 tick stop. I like the number 30, so that's good. I might just go for simple 3-to-1 risk reward. So targeting a move to 123.30. Getting long at 122.40. Stop at 122.10. Targeting 123.30 Euro Yen.
Lovely.
It's just sort of like see the trend line from back there. So it's not just no reason, but I would prefer to buy a dip, but sometimes the dips don't happen. So there we go.
Cool. I've listened to both of what you've had to say about Euro, and the most convincing case I saw was Euro Sterling. So obviously you had that move yesterday, which we were on to an extent. Steve was on that. Got a little bit of a correction overnight, and from yesterday afternoon, potentially forming maybe some sort of pennant or flag. So I think we're going to go higher with that one. And one of you's got a line drawn on that chart. That's their existing channel. So I'm going to.
That was Stevie's target from yesterday.
I'm going to go for his target again then, 91.70.
Yeah.
Buying at 90.75. Stop loss at 90.50. 25 tick stop. 100 tick target, roughly 4 to 1.
Lovely. I'd take a little bit of that as well. Gets a little bit of that gets added to my P&L because you're using my levels.
Okay. Well, we'll see how you behave tomorrow after the Arsenal-Liverpool match.
Oh, are we still playing the league? I thought we'd won it.
Yeah.
And seriously, I mean, Arsenal, what, they mid-table now? We should beat them, I think.
I don't think we're even mid-table, are we? Just we're there. We're in there somewhere.
No, I mean, I'm excited to watch it. I mean, Arsenal, great attacking side. I love the front
Used to be.
three. But the sort of like at the back, they're looking a bit ropey. Mind you, Liverpool haven't been playing well, so
Don't need to, do you?
no, don't need to. We can win ugly as well. But yeah, is it at Arsenal? Or is it?
I think it is.
It's at
actually,
Arsenal, isn't it? Yeah.
Not that it makes any difference.
No, not without the crowd.
Our simulated crowd is louder than our normal crowd.
That's great. I mean, Liverpool, I think, missed the crowd. They've always said it's like an extra man.
Oof. Yeah.
So.
Go on then, we're ruining Ian's chances here.
It's all right. No, the longer you talk, the better entry I get. Actually,
does that tell you something?
These. I'm just these are some DMARC indicators on here. So you got this is going back to Euro Yen. 13 count here on the daily, but the stops above this swing high here, which makes nonsense. And then breaking down to shorter time frames, what we do have is we've got a 12 on a 1 hour chart. So that basically says that when we post a 13, we should sell off. Let's have a look at this RSI. It's making lower highs. So we've got higher highs on the chart, lower highs on the RSI. So we've got divergence, which should indicate that we take at least a corrective move to the downside. What normally happens when you get a wedge formation, if it's expanding or the normal wedge or whatever we're going to call it, you do get divergence combined with it. So I'm going to go against everybody. I'm going to go short at
Lone Wolf.
Yes, indeed. I'll even give you a tick. I'm going to go short at 122. No, it's 43 actually. It's trying to nick a tick. I'm going for this target down here, which is start the wedge, which is massive. And I'll have a stop, just a decent stop actually, just outside. So short 122.43, stop 122.88, target 119.32. If that doesn't work,
you haven't got any more hats left, do you?
No.
He's eating them all.
So, something else I want to talk about. We're always talking about a catalyst for the move, and obviously coronavirus and different bits and bobs. And obviously we've seen a move to the upside in stocks at the moment on the back of this potential cure. I was talking to Mr. Sullivan last night, so I've got to give a big shout out to Mr. Sullivan. And we were talking about the markets, and he mentioned this, and you don't see it in sort of the UK press, but it's the biggest dam in the world. It's called the Three Gorges Dam, and there's rumours that it could potentially. They've had 40 days and 40 nights. It's quite biblical.
That is very biblical.
Of flooding in China, and their flood season doesn't actually start until August. And these dams, there's 7 or 8 dams that feeds this major dam. It's the biggest dam in the world. It's got something like 60 billion cubic meters of water, and they're starting to release it because they're actually terrified that it's going to collapse, or the rumors have it that they're terrified it's going to collapse. If it does collapse, it will potentially affect 100 million people, and it will kill 10 million people. Oh. Is what they're talking about now. What you won't have seen on sort of European press either is that the fact that they've started releasing some of the water, it's actually flooded the province of Wuhan below. So at the moment, Wuhan's actually completely underwater, and if they keep on releasing it, it's obviously going to keep on pushing further and further. If it collapses, it will take 24 hours. There's that much water. It would take it 24 hours to reach Beijing. So it's a massive thing, and I can't believe that nobody's picking up on it. And I would have never picked up on it unless he had mentioned it. But it's in the press, but they're trying to keep it hush hush, and they're saying that there's nothing structurally wrong with the dam. If there's any hype, it's just Western hype, and they've got it all under control. Blah 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 blah. But there's some reports that it's actually already 1.5 meters above its critical level.
Wow.
So they've got, and it's still raining. It's the worst. They've already had the worst floods for 70 years, which also haven't been reported, and they're not even in the hurricane season yet.
Shit.
So it's something to watch. Thank you, Mr. Sullivan, for that bit of information. Big up, Sully.
Yeah, right. Okay, very interesting indeed.
So, yeah, something to keep an eye on. Could be the next catalyst, potentially.
You heard it here first.
Well, second.
Well, I heard it here first.
Yeah.
Okay, so data-wise today, there is quite a lot out, but in terms of high impact, we've got the US Empire State Manufacturing Index, which is due to rise to 1.5 from minus 0.2 a month previous. We also have a Bank of Canada rate decision at 3 p.m. and then we have the US crude inventories at 3:30. In terms of earnings, obviously we're underway with earnings season in the US. We had bad results from Wells Fargo, one of the banks out there, but investment banks like JP Morgan and also Citigroup did quite a bit better and performed okay. Later today, we have eBay, Goldman Sachs, and Alcoa all releasing their earnings today. So
it's all happening.
It's all going on. Other than that, I think we can call it a day. Unless anybody else got anything else?
No. All good. All good in the hood.
Great. Have a great day then, guys, and we'll catch you all tomorrow.
Cheers.
Yeah, best of luck. Cheers.
Bye.